You know that feeling when the markets go wild and your portfolio is just bleeding red? It is so easy to feel completely lost in all that chaos. But what if I told you that chaos isn't a threat? What if it's actually a signal? And really, that's the big question every single investor has to answer for themselves. Your answer to that question is going to determine whether you panic and sell at the absolute worst time or if you get ready for an incredible opportunity. For decades, when markets got totally irrational, legendary investors Peter Lynch and Sir John Templeton, well, they had this amazing ability to just cut through all the noise. They both saw the chaos not as something to fear, but as the ultimate signal to act. So let's start with Sir John Templeton's core philosophy. I mean, this guy built his entire career on one powerful, kind of counterintuitive idea. You have to run towards the fire when everyone else is sprinting away from it. He just understood something fundamental about markets. The best returns, they don't show up when everyone's popping champagne. No, they're born when everyone has completely given up hope. That moment of maximum pessimism is the moment of maximum opportunity. This right here is the key concept. When the selling is just out of control, when every piece of news is terrible, and when it feels like things can only possibly get worse, that for Templeton was the giant flashing green light to buy. It's that magic moment when great assets are priced way, way below their real worth, just because of fear. Templeton had this really great analogy for explaining the unique challenge an investor faces. See, in most jobs, consensus is a good thing, right? If 10 doctors all tell you to take the same medicine, you take it. But in the world of investing, consensus is actually dangerous. And why is that? Well, think about it. If everyone agrees that an asset is fantastic, its price already reflects all that optimism. The real bargains, the huge opportunities, are found where nobody else is looking, in the assets that everyone else is desperately trying to get rid of. Okay, so now let's pivot to Peter Lynch and see how this all connects. While Templeton was out there looking for pessimism in the market, Lynch had his compass pointed at one thing and one thing only: the actual business underneath the stock price. This was Lynch's golden rule. He tuned out all the daily predictions, all the market chatter, because he knew that over the long haul, there is an unbreakable link between how much money a company makes and what its stock price does. And hey, the proof is right here. Just look at this. Over a 20-year stretch, the earnings for Coca-Cola and Merck grew 15 times over. And guess what? Their stocks also grew, you guessed it, 15 times. Now on the flip side, look at Sears and Avon. They were great companies once, but their profits went down and their stocks followed them right down the drain. The connection is just undeniable. This is something Lynch just could not wrap his head around. We spend hours, maybe even days, researching a $1,000 appliance for our kitchen, but then we'll throw thousands of dollars into a stock we know nothing about, just based on a tip from a friend. His point? Do your homework. Understand what the company actually does and whether it's making any money. All right, so we've got Templeton buying fear and Lynch buying earnings. But the secret sauce, the one thing that truly united both of them, was the one ingredient most people just don't have: patience. See, they both saw this huge difference between speculating and actually investing. The speculator? They're obsessed with the daily price swings, hoping for a quick win. The investor, on the other hand, knows they own a piece of a real business and understands that time is their greatest friend, letting that company's value grow and grow. It's so easy to get frustrated when that hot stock you bought doesn't double in a month, right? But Lynch is here to remind us that's not how the game is played. Real wealth is built over years, not weeks, by just letting good companies do what they do best. And Sir John Templeton? How long did he typically wait? Get this. His average holding period for a stock was 5 years. He would buy a company when it was, in his words, terribly unpopular, and then he would just patiently wait for the rest of the market to finally catch on to its true value. Okay, so now let's put it all together. What happens when you take these principles and test them in the ultimate pressure cooker, a full-blown market crash? I want you to just picture the scene. It's October 1987. Panic is absolutely everywhere. The market is in a total freefall. This is the very definition of maximum pessimism. People were just dumping everything, including shares of a really well-known investment company called the Dreyfus Fund. They saw the price collapsing on their screens, and they just wanted out, no matter the cost. The stock price crashed all the way down to $17 a share. Now, to all the people selling in a panic, this was a complete disaster.
But Lynch, applying his simple principle of doing the homework, saw something else entirely. He looked right past the scary price and at the actual business. And what he found was that the company had
$17 in cash for every single share. Yeah, you heard that right. By buying the stock for $17, you're essentially getting the entire investment business, all its assets, its famous brand, its operations, for free. It was, as Lynch himself said, just ridiculous. And that right there is the ultimate lesson. The noise of the market created this absolutely absurd situation. The disciplined investor who just focused on the real value underneath was handed the opportunity of a lifetime. Market declines aren't the threat, they are the reward for those who are prepared. Look, there will be another crash, there will be more pessimism, and there will definitely be more fear. It's gonna happen. The only question is, when it arrives, are you gonna be guided by all the noise or by the wisdom of these legends? Are you gonna panic or are you gonna pounce?